Hi guys, today we are going to be talking about ethical investing through ETFs in Australia. So the first thing I want to mention here real quick is ESG. And ESG stands for Environmental, Social and Corporate Governance and refers to a class of investing that is also known as sustainable investing, which is an umbrella term for investments that seek positive returns and long-term impact on society, environment, and the performance of businesses. So what are our options for ETFs that fall within this umbrella term in Australia? In this video, I'm going to be focusing a little bit more on the fund composition from a perspective of how much shares and bonds we have, how many securities each of the different ETFs have. What I am not going to do here, but you should do it for making a decision yourself, is whether or not the type of exclusion or the type of inclusions that the ETF has makes sense for you. Whether the negative or positive screening that a certain ETF applies to its products, whether that makes sense for you or not. So we're going to skip that for this video, and we're just going to be looking at what options are there and what they look like. At the end of the video, I'll give you an impression on which one I would choose or which ones I would choose if it was my money being invested. But you're going to have to get your own advice, your own personal advice. This is just what I would do. So let's get started with this and have a look at our options for bonds up at the top here. So one of the few options that we have that fall within this ethical ETF framework is the BetaShares Sustainability Leaders Diversified Bond ETF. This one has an annual fee of 0.49%, a dividend yield of 2.33%. It's passively managed, just like all the funds we're going to have a look at here. It is hedged, so you're not going to have to be concerned at all with currency fluctuations between the Aussie dollar and any other currency. And then there's a couple of interesting informations here as well. It is invested about 43% in Australia and 57% in the rest of the world. And it contains 444 securities within this ETF. I also like to have a brief look at what's in the ETF. And in this one, you can see the biggest holdings here. And there's a massive one here in the French Republic government bonds. And then you're going to see some other stuff from Europe here, some stuff from Victoria, and even some stuff here from New South Wales. So it's diversified between Australia and the rest of the world. And I'll keep it at that for this one. Next up, we have the Vanguard Ethically Conscious Global Aggregate Bond ETF. This one has, and this will be something that you're going to see a little bit throughout this video, it has a substantially lower annual fee. Vanguard products tend to be incredibly affordable and cheap. It has a lower dividend yield of 1.69%. Same thing here, no changes there. This one is about 43% North America, 57% of the rest of the world, of which 5% is invested in emerging markets. The other interesting thing here is that it has way more securities than the BetaShares option, which is another thing that you're going to see a little bit throughout this video. Vanguard ETFs tend to have a bigger basket of securities in it. So having a look at the composition here on this one, and you have some United States Treasury notes, but note that the percentage of each of these is considerably smaller than in the previous one, and that makes sense because it has way more securities. The other one had some securities that were weighing in 1%, 2%, and I think the very first one is about 6%. This one is much smaller because you have more stuff in it. And there's stuff here from a variety of countries. I think this one is from Germany. There's a few options here from the United States. There's some stuff from France. And if we scroll down, there's also some bonds from Spain and Italy. So a diversified ETF here with bonds from all over the world. Okay, it's now time to have a look at some options that contain both stocks and bonds. And let's start with this one. This one is the BetaShares Ethical Diversified Balanced ETF. And Across the industry, you'll see these different terms kind of being used a little bit: balanced growth, high growth. But let's start with this one. This has an annual fee of 0.39%, a dividend yield of 1.59%, and then it basically has 50% Australian and international bonds, and then another 50% of stocks. So it's 50-50 bonds and stocks. Within the stock side of things, you get 30% international equities and 20% Australian equities. For these diversified ones, I could not find the number of securities. With this one specifically, we actually can't see the top securities, so I'm not going to spend too much time here. You can see the asset allocation, which I mentioned already, but there's not a lot of information that you can actually check for this balanced one. Next up, we have the BetaShares Ethical Diversified Growth. This one also has an annual fee of 0.39%, a dividend yield of 1.73%. Everything else is the same except the composition of the fund. In this one, we have 30% Australian and international bonds, and then we have 70% equities, of which 42% is international equities and 28% is Australian equities. So this one is a 70-30, in which you have 70% in equities and 30% in bonds. And we are going up in the amount of equities you have here. The next one is the BetaShares Ethical Diversified High Growth ETF. Same annual fee of 0.39%. I could not find the dividend yield for this one. Same thing here. And then we have just 10% of bonds, both Australian and international. And then the rest of it is equities. So 54% international equities and 36% Australian equities. Next, we're going to be having a look at a few options that are just equities or just stocks. Starting with the BetaShares Australian Sustainability Leaders. This one has a 0.49% annual fee, a 3.4% dividend yield, same as before with all the other ones that we checked so far, and this one is 100% Australian equities. This one contains a fairly concentrated portfolio with only 80 securities in it, but it probably contains a pretty robust filter for sustainability purposes. Looking at the top components in this one, you can see that they have a reasonable weight. You have some of them here in the 4.5 to 3.3 range. You have Xero, you have ResMed, Goodman Group, Telstra, Sonic Healthcare, Brambles, Fisher & Paykel, CSL, Suncorp. So a variety of companies here that have been screened to be sustainability leaders according to this ETF. Next up, we have the Vanguard Ethically Conscious Australian Shares Fund. This one has a pretty low annual fee of 0.16%, a dividend yield of 2.7%, and it's also composed of only Australian equities. And if you have a look at this one, you'll notice that we have more securities. We have 238 in this one. Looking at the composition here, you can see that within the top 10, now we have a significant amount of financials. You can see here 33.4% is financials, and we have companies such as CSL, Commonwealth Bank of Australia, National Australian Bank, Westpac, so all the banks are there, Wesfarmers, and another bank here, ANZ, Transurban, Macquarie Bank, Telstra, and Fortescue Metals. So a variety of companies from Australia according to market cap. The next one and the last one that is exclusively from Australian equities is the Van Heck Vectors MSCI Australian Sustainable Equity ETF. This one has an annual fee of 0.35% and a dividend yield pretty high of 5% for those of you that might be a bit more interested in high dividend yields. It's 100% Australia, and it's also extremely concentrated with only 70 securities in it. Some of the companies here we have already seen, but we have Fortescue Metals, we have ANZ, Goodman Group, Telstra, Transurban, CSL, Newcrest Mining, Xero, Sydney Airport, and Brambles. And as you can see, because it's a more concentrated fund, we have some of these companies being represented nearly to 7% of the amount of weight that they have in this fund. Time for the international ones now. So starting off with the Vanguard Ethically Conscious International Shares Index Fund. Again, rock bottom annual fee for this one, 0.18%, 1.6% dividend yield, so a little bit lower, kind of makes sense. The international ones should have lower dividend yields. And this one has 68% US and 32% of the rest of the world, excluding Australia. And look at this. This one includes 1,562 securities, so very, very well diversified. In terms of composition, no surprises here. We have the big American tech companies. So we have Apple, Microsoft, Amazon, Facebook, Alphabet, Tesla. Tesla just made it to the S&P 500 recently, so it now has a large enough market capitalization that makes it be accepted to these big ETFs. JP Morgan Chase, Visa, Procter & Gamble, Nvidia, and then finally down here we get to one that is not US, Nestle. And if you actually open the full composition of the fund, you'll start to find more and more that are not based in the US. But obviously at the moment, the big companies with the largest market caps are in the US, so it makes sense that this being a market-weighted fund, most of the top ones are in the US. The next one here on my list is the BetaShares Global Sustainability Leaders ETF, but this one is currency edged. So this one is different than all the other ones we're checking here. This one gives you some currency protection, which might be important. Depends a little bit on your specific goals and situation and how long you're going to be investing for, I guess. This one has a higher annual fee of 0.62%, so relatively considerable there. A dividend yield of 1.89%, and pretty much 72% of the securities in this index are in the US, and 28% are in the rest of the world except Australia. A total of 199 securities in this one. So what do we have in this one? We have Tesla, Apple, Nvidia, MasterCard, Visa, PayPal, Home Depot, Adobe, ASML Holding, and Toyota. So different than the one I just showed you from Vanguard. It uses different screening options, so it ends up with a different composition, probably a higher screening requirement, if you will. The next one on the list here is pretty much the same thing, but this time not currency hedged. So it's the BetaShares Global Sustainability Leaders, slightly lower annual fee of 0.59%, a higher dividend yield of 4.2%, and this one is not hedged, is unhedged, and the same composition here, so 72% US, 28% rest of the world, excluding Australia, and same amount of securities. And the composition of this one is exactly the same as the other one. I have them both open here, and as you can see, it's the same thing, no difference. Last one on the list here, we have the Van Eck Vectors MSCI International Sustainable Equity ETF with an annual fee of 0.55% and a dividend yield of 2.54%. This one is interesting because it has a smaller load in US equity, so only 35% US, 65% rest of the world excluding Australia, for a total of 177 securities. Having a look here at the top 10 holdings, we have Microsoft, Home Depot, Amgen, Sony, Novo Nordisk, Siemens, BlackRock, Allianz, L'Oreal, and Schneider Electric. So a bigger variety. We got stuff from a variety of countries here. So definitely a slightly different composition. You can also see the distribution by country here, and you have a lot of Europe, you have a decent chunk in Japan, a little bit in New Zealand even. So more diversified from the point of view of the country distribution, but not more diversified from the point of view of how many holdings, how many securities are in the fund. The next question would be how to build a portfolio with all these options. And again, I'm going to remind you that I'm not taking into consideration the types of screening that they're doing. I'm just looking at this from the point of view of building a portfolio and the things that I like in terms of the annual fees, the number of securities, and mainly focusing on that, not so much on whether or not I philosophically agree with the type of screening that each of those is using. That is, however, something that you should definitely consider and look into with extreme caution to make sure that whatever choice you make aligns with the way you look at these things. So for me personally, if I was to build a portfolio, I'm in my mid-30s, I tend to like these 70-30 portfolios in which we have 70% in equities and 30% in bonds. So I would probably go with all the Vanguard ones, mainly because they're more diversified. They have more securities in them, and also a super important point for me is the annual fee. This would be the option that would give me the lowest annual fee, which will reflect in returns, I guess. Now, for me personally, like I said, in my mid-30s, I kind of like this option. So I would probably go 30% in the bond one and then 35 in the two stocks one. So the Australian and the international options. You could probably go a little bit lower here, maybe 32%, 30%, and a little bit higher here, maybe 38, 40. I would be comfortable doing that myself as well if I just wanted a tiny little bit of a tilt towards the international option. Now, this would be the portfolio that I would choose if I had a reasonable amount of money to invest. For example, if I had a few $1,000s a few times a year to invest, I could easily go with this. If we're talking about smaller amounts of money and or more regular contributions to the ETFs, if I just want to put maybe $1,000 or less and I want to do that every month or every couple of months, I would probably go with one of these. I would probably go with one of the ones that is already ready to go. And again, if we're talking about the 70-30% option that I said and I shared with you that I tend to like at the moment, for me personally, that would be this one, the DGGF. So for smaller amounts of money, because of the commission that you pay every time you buy the ETF, I would probably just go with a one fund solution and pay a little bit more in the annual fee there. For larger amounts of money, I would probably look into this option because the annual fee is going to be lower. So it depends a little bit. Depends, like if you're going to be investing, $5,000-$10,000 every 3 months, for example, you could easily go with that. If you're going to be investing maybe $1,000 every month instead, probably an option like this is going to chew up less of your commission fee every time you need to buy the ETFs. So once again, I am going to mention here that this is not advice for you. You need to make your own decisions and seek professional advice. I'm not a professional. I'm just sharing with you what options are there and how I would build my portfolio according to my risk preference, according to what I like, according to what I would like to see in my own portfolio. Definitely not advice for you specifically. Definitely not personal advice. I hope you took some value from this video. Keep well. I'll see you in the next one. Cheers.